There's a pattern that destroyed Rome, bankrupted Spain, and collapsed Britain. Stage 6. Loss of confidence. The moment when central banks quietly buy gold while telling citizens to trust paper, when the wealthy move assets while the public is told to stay invested. Rome reached stage 6 in 250 AOD. Soldiers refused debased coins. Spain reached it in the 1590s. Creditors refused to lend despite infinite silver. Britain reached it in 1967. The world abandoned the pound. America reached stage 6 in 2024, and the evidence is undeniable. In this video, I'm going to show you the exact indicators that mark stage 6 of empire collapse. You'll see how Rome, Spain, and Britain all exhibited the same signs. And you'll see that America is displaying every single indicator right now. By the end, you'll understand what stage 6 means, how long it lasts, and what comes next. Before we dive deeper, let me know in the comments. Where are you watching from and what economic trend concerns you most? And if you want to understand where this pattern leads, hit subscribe. Every empire that has collapsed economically followed the same 7-stage pattern. Stage 1. Dominance, military power, economic strength, currency trust. Stage 2. Overextension, expanding beyond economic capacity. Stage 3. Deficit spending. Borrowing becomes structural. Stage 4. Currency debasement. They can't tax enough, so they debase the currency. Stage 5. Inflation. Prices rise, purchasing power evaporates. Stage 6. Loss of confidence. Smart money quietly exits. This is where we are now. Stage 7. Collapse. The currency fails. The empire cannot maintain control. 4 empires have followed this pattern: Rome, Spain, Britain, America. The first 3 completed the cycle. America is in stage 6. Right now, let me show you the pattern. Rome. 250 to 270 AD. In 250 AD, Rome was the most powerful empire on earth. But confidence in the denarius was collapsing. Silver content had been reduced from 98% under Augustus to less than 50% under Decius. In 260 AD, Emperor Valerian was captured by the Persians. His son Gallienus tried to pay the legions with debased denarii. The soldiers refused. They demanded payment in gold aurae instead. Merchants began refusing denarii for large transactions. They wanted gold, or goods, or foreign currency, anything but Roman coins. Tax collectors couldn't collect taxes. The government couldn't pay soldiers. Rome entered stage 6 around 250 AD. By 476 AD, the Western Empire was gone. Spain. 1590 to 1607. In 1545, Spain discovered the Cerro Rico silver mountain in Potosi. For a century, half the world's silver flowed into Spanish coffers. 16,000 tons of silver. Spain declared bankruptcy in 1557, again in 1560, again in 1575, again in 1596. By the 1590s, creditors stopped lending. Despite Spain having mountains of silver, bankers in Genoa and Augsburg refused new loans. Spain's spending, endless wars in the Netherlands, France, England, exceeded even infinite silver. In 1607, Spain defaulted again. Creditors demanded collateral in land, trade monopolies, anything but promises of silver. Spanish merchants began using foreign currencies for international trade. Genoese bankers moved capital to Amsterdam and London. Spain's stage 6 lasted from roughly 1590 to 1640. By 1898, Spain's empire was completely dissolved. Britain, 1967 to 1976. In 1945, Britain controlled a quarter of the world's landmass. The pound sterling was the world's primary reserve currency, but by 1967 the empire was bankrupt. November the 18th, 1967. The British government devalued the pound by 14.3%. Prime Minister Harold Wilson told the British people, "This does not mean that the pound in your pocket has been devalued." But everyone knew it was a lie. Foreign central banks began diversifying out of pounds and into dollars and gold. Wealthy British citizens moved capital to Switzerland, New York, Singapore. In 1976, Britain had to go to the International Monetary Fund for a bailout. Britain's Stage 6 lasted from 1967 to roughly 1976. The pound never recovered its reserve status. The pattern: 3 empires, 3 centuries, 3 currencies, the exact same Stage 6 sequence. Roman elites demanded gold. Spanish creditors refused new loans. British capital fled to safer jurisdictions. In every case, the government insisted everything was fine. In every case, those who listened to the government lost everything. In every case, Stage 6 led to Stage 7. No exceptions. Here's how Stage 6 operates. Step 1. The smart money sees the math. Stage 6 begins when sophisticated actors, central banks, wealthy individuals realize the currency is doomed. The debt is unpayable. The deficits are structural. The debasement is accelerating. They don't need to guess. They can calculate the endpoint. Step 2. Quiet repositioning begins. The smart money doesn't announce what they're doing. They quietly diversify. Central banks buy gold. Wealthy individuals move assets offshore. Corporations shift capital to foreign subsidiaries. It's measured, calculated, invisible to the public. The key characteristic of Stage 6. It's quiet. Step 3. The government denies governments always deny what's happening. Harold Wilson: the pound in your pocket has not been devalued. Spanish kings: we have infinite silver, we will pay our debts. Roman emperors: the denarius is strong. American officials today: the dollar is the strongest currency in the world. The denial is institutional, and it's always wrong. Step 4. The cascade becomes visible. Eventually, the quiet repositioning becomes large enough to be noticed. Bond auctions show weak demand. The currency weakens despite intervention. Inflation accelerates despite rate hikes. The government can no longer hide it, but by this point, the smart money has already repositioned the mechanism. Summary: Stage 6 is a mathematical cascade. Smart money sees the math, exits quietly. Government denies, intervenes, fails. Public realizes too late. Currency loses confidence gradually, then suddenly. And it always leads to Stage 7. Now let me show you the exact same pattern playing out in America right now. The parallels aren't similar. They're exact. Central banks. The smart money. In 2023, central banks purchased 1,037 tons of gold, the highest annual purchase since 1967, the year Britain entered Stage 6. China's central bank bought gold for 17 consecutive months through November 2024. Russia, Turkey, India, Poland, all accumulating gold aggressively. They're diversifying out of dollars. This is the exact behaviour that marks Stage 6 in Rome, Spain and Britain. BRICS expansion. In January 2024, BRICS expanded from 5 members to 11: Saudi Arabia, UAE, Egypt, Ethiopia, Iran, Argentina. This represents 36% of global GDP. They're actively building dollar alternatives. China and Russia already settle trade in yuan, and ruble Saudi Arabia is now accepting yuan for oil sales. This is exactly what happened to Britain in the 1960s and 70s. Former allies began using dollars instead of pounds. Within a decade, the pound lost reserve status. The pattern is repeating. Foreign Treasury sales. China's Treasury holdings peaked at $1.3 trillion in 2013. By December 2024, they're down to $760 billion. That's a 42% reduction. Japan has also been reducing holdings. They're not selling aggressively. That would crash the market. They're quietly reducing, just like Spanish creditors in the 1590s. Stage 6. Regional bank failures. March 2023, Silicon Valley Bank collapsed. $212 billion in assets. First Republic Bank, $233 billion, failed. Signature Bank, $110 billion, failed. 3 major bank failures in 2 months. The Bank Term Funding Program had to inject $300 billion in liquidity to stop contagion. This is exactly what happened in Britain in 1974 to 1976. Secondary banking crisis. Government insists it's contained, then larger crisis emerges. $1.5 trillion in commercial real estate loans are coming due in 2024 to 2025 office vacancy rates in major cities, 20 to 30%. Property values down 30 to 40% from 2021 peaks. This is the next contagion vector. Ray Dalio. Cash is trash. Stanley Druckenmiller. I'm long gold, short bonds. Paul Tudor Jones. All roads lead to inflation. These are the best macro investors alive, and they're positioned for currency debasement. Americans renouncing citizenship hit record levels in 2023. 5,315 people gave up their US citizenship, up 30% from 2022 high net worth individuals moving wealth offshore before capital controls arrive. This happened in Britain in the 1960s. It's happening in America now. The parallels are exact Rome. Elites demand gold. Stage 6. America, central banks buy record gold. Stage 6. Spain, creditors refuse loans. Stage 6. America, foreign treasury holdings decline. Stage 6. Britain, capital flight offshore. Stage 6. America, citizenship renunciation at records. Stage 6. We're not heading towards Stage 6. We're in it. The 7-stage pattern has repeated 4 times. Stage 1. Dominance Rome with the denarius, Spain with silver, Britain with the pound, America with the dollar. Stage 2, overextension. Rome 35 provinces, Spain 4 continents, Britain quarter of the world, America 750 bases in 80 countries. Stage 3, deficit spending. Rome deficits from 200 AD onward, Spain borrowing despite silver. Britain deficits from WWWI. America, $36 trillion in debt. Stage 4, currency debasement. Rome denarius, 98% to 5% silver. Spain, flooding Europe with silver. Britain, leaving gold in 1931. America, leaving gold in 1971, printing $6 trillion since 2020. Stage 5. Inflation, Rome. Prices up 50 times. Spain, Europe-wide inflation. Britain, 25% inflation in the 1970s. America, 9% in 2022. Stage 6, loss of confidence. Rome, 250 to 285 AD. Soldiers refuse denarii. Spain, 1590 to 1640. Creditors stop lending. Britain, 1967 to 1976. Capital flight and IMF bailout. America, 2023 to present. Central banks buying gold. BRICS expanding. Foreign treasury sales. Stage 7, collapse Rome, 476 AD. Spain, 1898. Britain, 1945 to 1960. America, unknown. Pattern suggests 2030 to 2040 range. Every empire that entered Stage 6 moved to Stage 7. No exceptions. Rome, 35 years. Spain, 50 years. Britain, 9 to 15 years. America entered Stage 6 in 2023 to 2024. If history holds, we have 5 to 15 years before Stage 7. The pattern has never been broken. So what does this mean for you? Stage 6 is not collapse. It's not panic. It's the quiet repositioning phase. This phase can last years, even a decade, but it always leads to Stage 7. Understand who survives Stage 6. In Rome, those who held gold preserved wealth. Those who trusted denarii lost everything. In Spain, merchants who demanded hard collateral survived. Those who accepted promises lost everything. In Britain, capital that moved offshore before controls preserved value. Capital in pounds lost 95%. The pattern rewards those who see clearly. This isn't fear-mongering, this is pattern recognition. Sophisticated actors, central banks, billionaires, corporations are quietly repositioning. They see stage 6. The question is, do you? This isn't financial advice. I'm showing you a historical pattern and letting you draw your own conclusions. But the pattern is clear. The pattern has repeated 4 times across 2,000 years: Rome, Spain, Britain, America. Every time they believed they were different, they were wrong. Because the pattern isn't about technology or policy. It's about mathematics and human psychology. You cannot spend more than you earn forever. You cannot debase your currency without consequences. The mathematics are unforgiving. If this changed how you see the current economic situation, subscribe. Next week, I'm covering exactly what Stage 7 looks like. What happens when confidence fully collapses? The pattern is clear. The only question is timing. Let me know in the comments. Which Stage 6 indicator concerns you most? And I'll see you in the next one.